Have you ever stared at a price chart and just felt lost? Like you're trying to find a pattern in complete static? Well, today, we're going to cut right through that noise. We're going to break down a really fundamental idea called the price cycle. And trust me, it's a simple concept, but it can totally change the way you see the markets, showing you that every single move has a clear start and a predictable finish. You know, if you're new to this whole trading thing, you've probably had this exact experience. You pull up a chart, and it just looks like, well, a chaotic mess, right? A total jumble of ups and downs with no rhyme or reason. It's a super common feeling, but it really makes you wonder, is there some kind of hidden logic under all that? A secret roadmap? And the answer to that is a huge, resounding yes. What looks like total chaos is not random at all. In fact, price is delivered with incredible, almost scary precision, all thanks to institutional algorithms. See, the big banks and financial institutions, they use these incredibly complex programs to move massive amounts of money around. So the first big mental shift for you is this. We are not dealing with chance here. We're dealing with a highly engineered, totally structured delivery of price. Okay, so if it's all algorithmic, how in the world do we start to make sense of it? Well, we do it by understanding something called price cycles. I want you to think of every major move in the market like a road trip. It's got a clear starting point, and it's got a definite destination. We just call these point A and point B. So let's lock in a clear definition here. A price cycle is simply the journey price takes from point A, its starting block, all the way to point B, its finish line. And this whole trip is engineered by an institutional algorithm. Now, what's it driving towards? It's on the hunt for liquidity. You can think of liquidity as these big, giant pools of buy and sell orders just sitting there in the market. That's where the institutions can get their huge trades filled. So the algorithm's entire job is to move price to those pools as efficiently as possible. Every single one of these A to B journeys has three very distinct phases. First, it kicks off at point A, what we call the inception. This is where a whole new price swing is born. Then you get the expansion. That's the big, strong directional move itself. And finally, the journey wraps up at point B, the terminus, which is where the algorithm has hit its target and the cycle is complete. This quote right here, this is really the heart of it all. It's such a powerful reminder to just stop looking for complicated, random patterns and instead start looking for the beginning and the end of these very deliberate price cycles. I promise you, once you start to see the market this way, the charts just start to click. They make so much more sense. So how does the algorithm actually pull off these journeys? It really only uses two main programs, a buy program to push price up and a sell program to drive it down. And get this, they're perfect mirror images of each other. So for example, during a buy program, an old price ceiling that was hard to break through, it becomes a new floor offering support. And in a sell program, the exact opposite happens. Old floors become new ceilings of resistance. All right, let's dig into the upward path first. This is what we call a buy program, and it's basically how the algorithm systematically and methodically builds price higher and higher. So how do you actually spot a buy program in the wild? Well, it usually starts from a really obvious bottom, what traders call a swing low. That's our point A. From there, you'll see price start pushing up with real force. And here's a key tell. Old resistance levels, once they're broken, now start acting as support. Now, for getting in on the move, the idea isn't to perfectly catch the very bottom. Instead, you're looking for opportunities in what's called a discount zone, which is really just a simple way of saying the lower half of that whole A to B price move. Okay, now let's completely flip the script and look at the downward path. This is the sell program. It's essentially the process of price being taken apart or repriced lower with that exact same algorithmic precision. And seriously, the sell program is a perfect mirror image of the buy program. It starts from a clear top or a swing high, and yep, that's our point A. Then you'll see price move down hard, smashing through support levels. And those broken levels? They often get retested as brand new resistance. The algorithm has a destination, a point B, somewhere below where it started. And for this type of move, the best entry spots are usually found in a premium zone, which is just the upper half of the range from A to B. Now listen up, because this concept is absolutely vital, especially when you're starting out. You are going to see price poke its head just a little bit past a key level before continuing on its way. This is called price distortion. It is not the program failing, it's just expected market noise. You have to learn to allow for these little overshoots, otherwise you'll get spooked and shaken out of perfectly good moves all the time. All right, we have covered a lot of the theory. Let's pull all these pieces together into a really practical framework. I want you to think of this as your brand new compass for navigating the market's A to B journey. This little table pretty much sums up our entire new compass. Let's just walk through it real quick. How does price move? It expands from A to B. Why does it do that? Because the big institutions are delivering price to where the orders are, to that liquidity. Where on the chart do we look? Between a clear swing low and a swing high. And now, what should we actually care about? This part is key. Your job is to identify the start point and the target point, not to get lost trying to name a bunch of complex patterns. And finally, look at that last row on structure. These cycles are fractal. That's a mind-blowing idea. It means this exact same A to B logic works on every single time frame, from a monthly chart all the way down to a 15-minute chart. The big trend always sets the stage for the smaller one. Okay, one last very practical piece of advice. Focus your time and energy on what we call low resistance environments. What does that mean? It means look for those clean, fast moves where the algorithm is repricing quickly and efficiently. I mean, why would you want to sit through hours of boring, choppy, sideways price action when you can learn to spot and ride along with these much easier, high probability moves? So there you have it. We've laid out the map. You now have a completely new lens for looking at the market, not as random noise, but as a series of structured, logical, algorithmic journeys from a point A to a point B. So the only real question left is, the next time you open your charts, where are you going to look first?